Dive-In.
Bienvenidos a Diving.
Witajcie na festiwalu Dive-In.
Welcome to the Dive-In Festival.
Willkommen zu Dive-In.
Bienvenidos a Diving.
Welcome to Dive-In.
Mabuhay sa Diving Kapistahan.
Üdvözlünk a Diving Fesztiválon!
Добро пожаловать на фестиваль Dive-In.
ברוכים הבאים. בואו לצלול איתנו.
ডাইভ ইন উৎসবে আপনাদের সকলকে জানাই সাদর আমন্ত্রণ।
Diving'e yokoso.
Benvenuti al Dive-In Festival.
Diving Festivali'ne hoş geldiniz.
Thank you. That's the first time I've seen that welcome video. It's awesome, really awesome. So hello everyone, and a big welcome to our dive-in session on insurance to serve every generation. I'm Caroline Wilson, I'm the HR Director at Kennedy's Law, and I'm absolutely delighted to be chairing this event in partnership with the Chartered Insurance Institute, the Next Generation Insurance Network, and the Insurance Families Network. The purpose of our event today is to shine a light on the medium and the long-term implications of our ageing population on society, and I include myself in that. We're going to explore what that means for colleagues and for the insurance sector, so we can prepare not only to respond to its challenges, but hopefully to take some positive opportunities to improve our later life health, our well-being, and our financial security. This isn't just about life insurance for older people. This is about all of us thinking about our own life stage and our preparedness for how we support our family, our friends throughout life, and of course, how we respond as the profession. Coronavirus has brought a number of things to the forefront, such as the care crisis, work-life balance changes, and health inequalities that all make this conversation particularly topical right now. And I know we'll all be sitting waiting for the later announcements tonight. Many of us have taken on new and additional roles with family members, perhaps homeschooling or even caring for older relatives. It's no longer something we hide away from our work colleagues like an embarrassing secret, because it's all there right now on Teams or Zoom. So we're going to start with a short overview of the research and insight into current and future trends around our ageing population and what that means. Dr. Matt is the Director of Policy and Affairs at the Chartered Insurance Institute, and he is going to take us through the research. I must admit, I always like statistics myself, so I'll be fascinated to see what Dr. Matt's going to share with us. Then we're going to have a panel debate with Benjamin, with Ian, Phil and Sophia about what this all means for us as individuals, as employers and professionals. Throughout the whole event, we'd really love you to ask questions through the chat function, and we will do our best to field them, finding the right person to answer them. So, without further ado, it's over to Dr. Matt to tell us about the reality behind our ageing population.
Great. Well, thank you, Caroline, and a lot of the things you've said there are going to be recurring themes in what we say, particularly about the reality of our home life, which for various reasons has sort of been suppressed and ignored, but that's the really engine room of what motivates us and what makes us make decisions. And so that's something that we're trying to bring into commercial reality as much as we possibly can. I guess, once upon a time, talking about aging was tragically simple. Aging meant poverty. Most people who were poor were old, and most people who were old were poor. And I can remember news stories from the 1980s where tragically older people, pensioners, would be found dead in their homes with hypothermia because they simply couldn't afford to heat them or maintain them. And in the last 40 years, things have got better. Things have improved. So the Institute of Fiscal Studies, for example, tells us that between 1997 and 2018, the number of households in poverty, in 1997, 22% of those households in poverty were pensioner households, and because of successive government reforms like the pensions credit and the triple lock, by 2018 that had reduced to 18% of households, and significantly, being a pensioner didn't mean that you were more likely to be in poverty than if you were somebody in work or somebody of working age. So that's a big difference. But of course, we've also got to remember that there's a lot of diversity in this group, that we can't always rely on averages. And age charities also remind us that there are still a lot of pensioner households who do have to choose between eating well and being warm. So there is a huge amount of diversity within this group. So then that leaves us to ask ourselves, well, how can we find something that's universal? How can we find a theme that makes sense for all the stories about aging? And what we've looked at is the amount of control and independence that people have in their lives. We think that whatever circumstances people have, people always want to be as much in control as they possibly can. And three factors that allow them to be in control are obviously finances, even more importantly health, and also mental well-being and social interconnectedness. So those are the three elements: the mental well-being, health, and finances that are exercising us and guiding us in our work, and providing a common theme. But even when we look into those three different elements, again, the counter theme of diversity comes up. So if we go on to our next slide, we can see on the right-hand side, you can see that diseases like dementia and Alzheimer's disease, other physical issues like osteoporosis that affects women more than men, and older people more than younger people. These issues affect us far more when we reach our 80s and 90s than they do when we're in our immediate post-retirement of 60s, 70s, and even moving into the early 80s. And so again, that leads us to have another distinction within the aging population or the retired population. The people who are recently retired, sometimes referred to as the go-go phase of retirement, and then moving into the mid-80s and beyond, the sort of what's referred to sometimes as the slow-go times, when people aren't maybe enjoying so much independence. They're not engaging a huge amount as much as they did in terms of sort of travel and shopping and being out and about, but who nevertheless have a rich social life in many respects, and are still doing lots of amazing things to maintain their independence and their control over their lives. But it's two very distinct stages, and often people in one stage will recognise very little about the experiences in the next stage in terms of their own personal lives, although it may resonate a lot in terms of when they think about their parents or their children who are also going through the aging process. And there's not just that kind of diversity between different households or different ages, but even when we look at the average person, there's diversity in their experience as they go through older age. So if we look at the graph on the left-hand side of this slide, it charts different types of cognitive ability as we go through our lives. So starting in the 20s, physically we have very good, well-developed brains that are very good at things like inductive reasoning. So things like looking at a set of evidence and seeing patterns and generalizations within that evidence. And then as our brain physically changes, on average, it declines by the time we reach our kind of 70s and 80s to a point where there's a significant change in our ability to engage with things like spatial orientation, and our reaction time slow down, and maybe our inductive reasoning, we need more time to think things through. But at the same time, from our 20s into middle age, we actually improve things like our verbal ability, which and even our numeric ability, our experience and our experience with language as we explore language and understand it more, and even as we explore numbers more, we become better and better at dealing with these interactions. So by the time people are in their 70s and 80s, their ability to look at a situation and reason it through might have declined, and that might take longer. But actually their ability to communicate and to engage with people in the spoken word might actually be even better than it was, say, when they were in their 30s. And so the way in which we age and the way in which we have challenges to our independence is very nuanced. And if we think about something that affects us in financial services, such as people's proneness to be victims to scams, then we can see that there's an interesting and very nuanced thing going on here, that people who might struggle, and we know that people in older age are more vulnerable to being victims of scams. But equally, that we might have a situation not where somebody is just completely vulnerable, but where somebody's actually very competent and very good at knowing what's going on when they're in a conversation with somebody. But when they're faced with a piece of communication that they're not so used to, like an official letter or an email, that decline in inductive reasoning, which we all experience, might mean that it's harder for them to spot the telltale signs that add up to something's not quite right here. The email address isn't quite right, and there's a typo, and the kind of the company name doesn't seem quite right. It's harder to spot that when your inductive reasoning isn't what it used to be. But once you get into a conversation with somebody, you might be able to interrogate them and find out what's going on far more effectively than you could maybe 4 or 5 decades earlier. So what emerges here, I think, is a picture where as we grow older, our independence might be actually at a peak when we're in our 60s, when we've got the most level of financial independence that we've ever had, if we're lucky enough to own our own house and have a good pension income. We might be able to travel and have experiences that we never had before. So we might come into retirement at a very high level of independence and reliance, resilience and self-control. But at the same time, as we go through life and we go into later life, the chances of very serious challenges to our independence, like dementia, chronic pain, and diseases like Alzheimer's disease, those risks increase. But also we experience a sort of cognitive decline in some areas, but not all areas, and at different paces according to different individuals, which again provide challenges to our independence. And if we go on to the next slide, I think what that means for financial services is that the kind of very standard classical economic model of self-maximizing individuals, of people who go out and discover information and make decisions based on rational decisions, based on clear factual information, that picture changes, but it doesn't change in the sense of a straight line decline for everyone. It changes in terms of the way people cope, the way people use the skills that they've got and that are improving all the time, as opposed to the skills that they used to have that might be declining. So, for example, people might rely far more on friends and family to help them make decisions. But in doing so, they're still very much the ones making the decisions, and they're making very, very good decisions. Equally, people might go to the market, but they might go to the market what we find in a very tactical way. So they don't necessarily go to one company and ask for one one-stop solution for all their financial needs, but they work in different market solutions into. So they might save, but they might not save in a savings account. They might save in a Christmas account, or they might save up Nectar points. There's lots of different tactical ways that people engage with the market and fit that in to their normal circumstances. And I think for firms, what that means is that when we build communication plans, when we train people around communications, when we build customer journeys, we need to be far more aware of these different tactics, and the fact that often decisions are decisions made by an individual with a whole household or a whole friendship group, social group behind them, not just individuals. And I think in a way we learned today that the FCA is intervening in renewal pricing, and I think that's probably a good example. The way in which firms communicated with individuals around renewal pricing, the mindset was always we're giving information to one person, that person will process the information in a rational way and will act in a rational way. And actually, what we've learned is that renewal pricing works far more according to behavioural biases that might be exacerbated by the challenges posed by cognitive decline. And actually, that in this case, it's mean that the regulator is gonna step in and make decisions on behalf of the profession. And that's not to say that this wasn't a very difficult issue, and the profession didn't do a lot to try and address it and tackle it, and maybe regulatory intervention was inevitable. But I think in future, if we have a much clearer and nuanced ideas about how people really make decisions, that will very much help us control our own destiny as a profession and not have to lean on the regulator so much to make corrections for us. So if we move on to the next slide, I think there's an element of needing to understand decision making amongst people in older age and later life on their own terms and in a more complex and nuanced way. There's a duty to do that, to make sure we don't do things wrong and the regulator doesn't step in. But equally, I think there are opportunities in terms of where firms, where insurers and brokers can understand how these decision-making processes work in the way we design products, we design communications and application processes and renewal processes to actually gain commercial advantage and gain competitive advantages. So for example, one thing we always talk about in insurance is how everything is becoming automated and commoditized and standardized, and how we're competing more and more on price of selling commoditized packaged and fairly generic products instead of competing on quality. And I think there's an opportunity here if we really understand how people make decisions, how people structure their lives and structure their finances and the challenges they pose. There's an opportunity to create services and create customer journeys for people that are far more intuitive and pleasurable for them to engage with, and in doing so, escape from this trap of commoditization and actually compete on the quality of the experience, which will allow those firms that crack this issue and solve this problem. It will give them far more competitive advantage, give them niches that they can occupy and where competition won't be as fierce, simply because in order to compete, the competitor have to do something that's far more complex and difficult to get right. And I think in some ways we can see this happening in the market already. So for example, something as simple as motor insurance and the trend towards motor insurance, multi-driver insurance for households, rather than insisting on treating everyone as a separate individual. And so already, I think, in the market we can see some firms have realised the benefit of engaging with people as a household unit rather than engaging with people as individuals. And I think applying that kind of logic to later life, I think again the traditional approach is very good at helping people with catastrophes, with the house burning down, or with death. There's lots of products there that really do a fantastic job. Equally, I think the financial services sector is probably good at looking at everyday issues, payment issues, making things easier for people on a day-to-day basis. I guess where the real challenge is understanding all those issues that aren't catastrophic, but which are still very serious. Things like maintaining our house, coping with the steadily rising costs of care, all those kind of big but not catastrophic things that people don't want to think about. But if we understand people's psychology, if we understand the way people go about managing their finances, we can start building more complex and nuanced services and forms of communication, as well as products themselves, that help people start to address these issues in a more doable way. So in terms of the work that we're doing, that we're embarking on in the Chartered Insurance Institute, we're trying to do that. We're trying to tease out what it is, what is the real decision-making process that goes on within families, as well as the sort of the standard economic model of individual self-rationalizing individuals. So the first thing we're doing in our project is a big piece of research with an organisation called The Big Window, which specialises in research interviews with families as well as individuals, to tease out what it is that they do in their financial planning, in their coping with these problems in day-to-day life, and who they lean on, who they rely on for help with decision making, how those decisions get made, and how people kind of muddle through a lot of the time with their finances, and what's important to them, and what motivates them. So that's the first element. The second element is around insurance professionals and financial advisors, where we're going to look at how that kind of decision-making process affects different professionals in their day-to-day lives. So what does that mean for underwriting, for claims handling, for giving advice through brokers and financial services professionals, and once we've got those insights into the way in which people make decisions, how can we engage with the profession to make those insights meaningful for people's day-to-day jobs. And then the final element is with government and regulators and policymakers, and sort of saying, well, once we understand these decision-making processes, and once we understand what professionals can do in terms of building better advice processes, better product processes, customer journeys, and better products, what needs to change in terms of government policy around retirement and later life, to help us implement these insights and give the best possible service we can to people in later life. So if we go on just to the final slide, we can see that in terms of how our strategy feeds into the wider objectives, it's about understanding how everyone works in relation to later life, and also in looking at what is good practice now, not just what we think ought to be good practice. So we think with insurers, I know from experience in my own family that insurance contact centres have become vastly more sophisticated than they were sort of 30 or 40 years ago. The level of skills and ability throughout the profession is far higher than it ever was. So part of the Big Windows work will be talking to people who work in call centres to understand how their role has changed, how the way in which they communicate and engage with people in later life has changed, to tease out good practice from there. Another big output will be an intergenerational guide looking at how people from all ages can prepare for retirement and later life based on what we've learnt and what we see from the way people meet challenges in later life. So looking at people in their 20s, 30s, 40s and 50s, what can they do in terms of health and mental well-being and finances to prepare the groundwork for a healthy and happy and well-funded later life. And then finally, to take all those insights and bring them back to government and regulators to make sure that we as a profession have a strong voice in shaping the absolute best environment for people as they go into retirement and later life, which again, I'll just end by saying that in many ways is the age at which we reach most independence, most chance to engage with the world, to enjoy life and enjoy happiness. So that's the idea, to maximise independence and no longer, as we did in the 80s, see later life as synonymous with grinding poverty, but see it as synonymous with a long and happy period of independence.
Thank you, Dr. Matt. That was really, really interesting. If I look at my own life, my first job, we walked into final pension salaries and you didn't have to worry at all because you knew that your employer was going to take care of you, through to the complete demise of final pension salaries, to what we've got today, where we're all very much more responsible ourselves for planning our retirement. As I'm at that end of my working life, I'm particularly fascinated by what I see being offered to employers to offer to their employees. And for example, there doesn't seem to be anywhere out there that offers later life reassurance around your health. Mm-hmm. And it's things like that I would love to be able to offer to some of my, dare I say it, older employees. Anyway, so we now have a really good picture of the challenges and opportunities presented by our ageing population. And I'd like to turn to our panel members. Perhaps they can share with us their views on what we can do as individuals with our friends and our families, particularly, as I say, as an employer with our colleagues, and also as professionals for the customers and the wider society. So let's start perhaps with how this affects us individually. I'd like thoughts from everyone, but Ian, can I ask you if you could kick us off? Ian is Customer Director at the Chartered Insurance Institute, and he led the Institute Ensuring Women's Futures campaign. So listen up, girls, if you're out there. Ian, what can people do right now, particularly perhaps at the earliest stage of working life, to prepare for a healthy and financial secure later life? Thank you.
Thanks very much, Caroline. And just to say, not just women, although it was called Ensuring Women's Futures, I'm not surprisingly also not a woman, but equally engaged in this, and it's actually it's on all of us to look at how we can each be financially engaged. In fact, that's really one of the things I wanted to take from that programme, is that it's an evolution of the same mindset. We did lots of research into how both men and women engage with finance and well-being and their future health. And whilst we looked at where there were inequalities between men and women, actually a lot of this is very common across all intersections, both gender, also race, also social mobility, disability, etc., etc. There are lots of things we can learn from it. So that's where that translates. So I'm glad you said earlier that you like statistics, and I hope that other people do too, because I'm just going to share a couple more that I think help us decide where we focus our energies and abilities as individuals to think about what we can change. Because a lot of what I found particularly fascinating in the research we did over the last couple of years was understanding different approaches and how we as individuals engage with finance and our futures throughout our lives differently. And some quite frankly depressing figures about how we either lack capability, which sounds quite derogatory, or confidence or competence around planning. So it's about how we get more comfortable with and more engaged with that process, as you say, rather than being passively assuming either a pension or the state is going to solve these things for us, getting more involved in this. And one of the key messages is not just doing that for yourself, but how you can help those others in your life that you love and care for, whether that's children, parents or whatever, also benefit from that. So just a couple of stark facts to start off with. 7 in 10 women and 5 in 10 women have no idea what pension savings they have. That came from, I think, the British Social Attitudes Survey, but we've got lots of stats like that frankly just say, look, we need to do more to find out how these things are going to apply to us. It's not, as you said, about just getting more sales of these products, but actually what are they going to look for us and what else do we have to have in the mix. As career patterns change and we recognise there's no longer a job for life or a gold-plated pension at the end of it, as you were saying, we also need to think about what the future careers that we and our children, if we have them, or everyone else might be looking forward into the future. We all know that automation will be changing, not necessarily entirely replacing, but certainly significantly changing the types of roles and the skills that we'll need in future to succeed in them. So that's really important to me as a parent of 2 kids in school at the moment, giving them the right kind of advice about the things they need to focus on, the skills they'll need to get as far as I can to prepare them for roles that will be sustainable in future life and help them to earn the kinds of sustainable financial footing they'll need to prepare for later life. When it does come to later life, currently care is one of those issues that has come heavily to light during the COVID crisis, but remains an ongoing issue where there is no simple model that is going to solve it for everyone. It's a very different situation for different people depending on at what age they may need to go into, for example, residential care and what kind of support they need. But many people are not aware, in fact most people don't realise that above a very small threshold they will need to pay for any kind of residential care. And in fact for a woman in her late 60s at the moment, if she would go into residential care, that could be as high as £130,000, and that's something that most people just aren't prepared for, both mentally and or financially. Debt is also an increasing concern. Obviously more people go to university still, more people exit university with debt as well as credit card debt, but our understanding and approach to balancing debt and savings as we develop our later life is also a challenge. So a couple of thoughts on how we can help, and there will be a slide at the end of here on some places you can go for more information, because some of it's not immediately obvious. I mentioned we can all do more ourselves in just finding out about what our later life might look like, both in terms of health, so some of the stats that Matt shared earlier about thinking about what the future life might look like, but also what skills we can develop early. So my son's 8 and I've just got him started playing on the NatWest Island Saver on his Switch on shore. As the BBC would say, other savings programs exist for kids, but he loves it and he doesn't even realise he's learning, and he probably knows more now than I did when I was in my 20s about compound interest. So get people thinking early, even if they don't think they're learning, about the skills that they'll need to understand and engage in money and how they approach finances. I mentioned about how we make sure we're thinking about careers, both ourselves and as our and as family members. There's no such thing as a 9-to-5 job for life anymore. So whether it's thinking of future portfolio careers, whether it's mixing up and changing 5 different stages of career pattern, which is increasingly common, how are you going to prepare for that? We said at the beginning this isn't all about pensions, but frankly, if you haven't taken a serious look at what pensions you're building at the moment, what that might look like in later life, understanding what the state pension could actually look for you for now, there are resources out there where you can start to do that, but it starts with engagement. Find out what it'll look like for yourself. If you have a partner, make sure you're having that conversation with them. And if not a partner, any other family members or anyone else, think about what you might be reliant on if you became ill, or how you might support them if they became ill. There are products out there, and that might be appropriate for you, but at least having that conversation, thinking about what people's plans are in later life, or if it's in early life and thinking one of you may want to become a carer, whether as a parent or for an older family member, what would you be doing about your finances, etc. So all throughout life, there are different triggers that you should consider and think about how you would prepare for them. And that's not all about getting products, but clearly there are ones, whether it's income protection or other products that you could consider once you've understood what that might look for yourself. So when we come on to at the end, some places you can go and find out some more, I would recommend, certainly I've found myself reading up a lot more about what it looked like for me, what it looked like for my family. So it's not just about learning about pensions, it's certainly about how it's going to look for you, what different scenarios you might prepare for and plan to engage in, and to do that for your family as well as for yourself. So if I can pass back to you, Caroline.
I'm feeling a little bit depressed now, Ian.
I didn't mean it to be depressing. I mean, it's a bit of a wake-up call, some of the stats, but the rest of it is, it's empowering. What can we do? Empower.
So on that note, I'm hoping that Phil is going to be able to give us some bright news on that. So Phil is the CEO of AIG Life. And clearly this must be a very big focus for you guys. So, Phil, can you brighten our day a bit?
I'm not sure I can, Caroline. I'll do my very best. But I guess I will have some equally depressing statistics to go along with some recommendations as I go through. I try to bump up my credentials for this session. You can probably see from my picture that I've grown a grey beard in a way to try and gain some solidarity with the topic. So there may not be any searing insight, but at least I look the part. So I think my conversation was about what we could do as a provider to to engage with kind of an aging population. And I'll start by saying let's start with the positive, that the fact that so many of us are going to be living a longer life is a reason to celebrate. That said, we know from the conversations that Ian and Matt have just had that we know an aging population will have a challenge to society, it will challenge governments in unprecedented ways that we haven't seen before, particularly around funding. And it will force providers like AIG and all others to really understand better the needs of that aging population so that we can shape our propositions in a way that can help support people's physical, financial and emotional well-being. And I was drawn to Matt's comments, and I think my narrative will touch on some very similar themes. So the insurance company that I run in the UK is principally in the field of protection products. So a lot of what I talk about will be in that space. But I think the themes are applicable across other lines of business. When I think about the challenges of an aging population, I think there are probably 3 problems before us. The first 2 are connected. The first one is that customers have got an unrealistic expectation of how healthy that they're going to remain as they get older. At the same time, common to all industries, the needs and the expectations of customers and their lives are changing, and we need to be alive to what's going on in their lives. And then finally, and this is a little bit depressingly, there is a supply side challenge as well for insurers, because the very people that we want to help don't particularly trust us as an industry. Some of the comments earlier around how we engage with people as their cognitive abilities change, that would really be under the category of treating, and dealing with vulnerable customers, which is a very big theme for the FCA and something insurers pay a lot of attention to, about how our products and our services and our communication channels can help make sure that we're talking to people in the right way at the right time and providing the right products. So I'm going to pick up on all of those challenges as I go through. So if I start with the changing needs and expectations of customers, as I say, the great news is that we're all living longer. Hopefully, we're all going to be living longer. So when AIG was born over 100 years ago, the average life expectancy of a man born in the UK was 52. For a woman born in the UK, it was 56. If you now look at the Office for National Statistics, 1 in 3 babies born today will live to be 100. If you're a girl born today, that's 1 in 2. And by 2037, 1 in 4 people in our society will be over the age of 65. Currently today, that is 1 in 6. So the prospects of living longer are certainly increasing. I guess that is both daunting, fascinating, and as I've said, increasingly likely. Now we know how long people live is only part of the story, again, just picking up on previous themes. Sadly, the period that people spend in ill health towards the end of their life can put significant pressure on the NHS and on the social care system. And we know from our research that people are in illness denial. We commissioned some research with the Social Market Foundation, and we found that for those people born after 1960, 1 in 2 of those people is likely to be affected by cancer in their lifetime. However, when you ask customers, only 22% of individuals believe that they'll ever get cancer. And more than a third of the people that we surveyed didn't think that they would get any kind of long-term illness or serious condition throughout their life, which is frankly not the truth. Now, the problem here is that because people underestimate the chance of developing a certain condition, they fail to engage with the very things that would prevent them getting those conditions at all. So we know that people don't have the right diet or exercise regimes, particularly as they get older. And obviously, if they don't think they've got a problem, they don't put the right financial safety nets in place as well, things like insurance. And then finally, I guess just piling on the bad news, not only do people underestimate the likelihood of being affected by a serious illness, but they also underestimate the amount of time they'll spend in good health in later life. So again, in our polling, the average age that people thought they would live to was around 82, which is not too far off. But the average age people thought they would live to in good health was over 77. So that translates into an expectation that people think that 94% of their lives they'll be in good health, which is considerably higher than reality. If I look at AIG statistics, pretty sobering is the fact that the average the average age of our critical illness claimants last year was 47. So there is actually a big gap between expectation and reality, and hope at the moment is beating reality. If people aren't being practical and realistic about their chances of getting ill, then we know that is a real issue. And we also know that people can't afford to get ill. So touching on some previous themes, 3/4 of individuals would face some kind of financial hardship if they got ill in later life. And there was a report published last week by the Society for Aging Better, who argued that society needs a continued focus on improving health resilience and maximising the potential of people who are between 50 and 70 years old to help them stay in the workforce for all the reasons that that's favourable for their health, for their financial benefit, and also because societally, clearly that's a really good thing, particularly as we emerge out of the back of a very damaging pandemic for UK PLC. And so there needs to be a stronger focus, I think everybody accepts, on health resilience, both physical and mental health being. If I move very quickly just to, what can an insurer like AIG do to help? Well, I guess at the policy level, we can lobby government. All major political parties acknowledge that the current social care policy and funding framework isn't fit for purpose, and we all await the green paper on social care, hopefully sometime soon. It's now years overdue. From our research, we know that there's a significant minority of people who understand the need for some kind of personal provision. So to Ian's points around the cost of care, some people recognise that there will need to be a personal contribution, but frankly, that's less than a third. And around about 2/3 of people still think the government will pay for everything. So again, I think there's something we need to do as an industry to raise awareness. But if we get beyond public policy, and if I get into, if you like, my day job and the primary role as a product provider, then insurance companies need to avoid the marketing myopia of believing that we sell term insurance products or long-term care products, and recognise that increasingly we're in the health and well-being and financial well-being segment. And at a basic level, so what can we do? Well, we can make sure that our products and our services are providing an important safety net. But from my previous comments, you'll note that a lot of people fail to see the need for those products. But those products, when bought, need to remain simple, flexible, relevant to customers' changing needs, and I think increasingly that happens certainly in the UK market. But finishing off, as an industry, I think we can do, and we are doing increasingly more, shift our propositions from something that are only engaged with people when they have a traumatic event, to propositions that offer something meaningful and relevant every day through a customer's lives. And we can and do now provide tools to improve customers' well-being and health, packaged up alongside the traditional insurance products. So many insurers like AIG now offer a range of value-added services. So our products are called Smart Health, and they offer unlimited access to a suite of 6 services. And these are packaged up free to all our individual and group protection customers. And these talk to the sort of needs that have been outlined so far in this conversation. So that would be a 24/7 GP service, a second medical opinion service to top medical specialists, mental health support services, health checks, access to nutrition, consultations, and online fitness programs. And all of those are packaged together and available with the insurance product and available to both the policyholder and their immediate families, both for our individual customers and our group customers. I guess in conclusion, increasingly our industry can provide these value-added services digitally. The pandemic's drawn out the fact that we've got a new population of people who are happy to engage digitally. And as people are living longer lives, that is a reason to celebrate, but we know it's going to disrupt societies and challenge governments. So I know that there is a role that insurers can play, advisors can play, and the industry can play in raising awareness and introducing more flexible solutions that will help people have an intervention to give them a more meaningful life, healthier, happier, and more secure. So Caroline, I will stop there.
Thank you, Phil. In the interest of time and we have got the odd question coming in, I'd like to now hand over to Benjamin Hinton, who is Vice President of Risk Management at Marsh, and he's also Chair of the Next Generation Insurance Network. Ben, can we hand over to you, please?
Yeah, sure. Thanks, Caroline. I'll try and keep this relatively quick in the interest of time, but I think when we look at what employers can do to support their employees through this journey, I think it's more about them becoming a partner through the understanding of financial well-being. So from my experience through the Next Generation Insurance Network, what we tend to see is employers provide the pension plans and they provide kind of information, but maybe don't provide that level of education to their employees as they're going through. I think it's particularly true of younger joiners to the industry who maybe their only reference point is their parents, who have very different pension arrangements and very different experiences of the workplace and to what life is like for the younger generation today. One of the things that we found as a network that has been very popular with our members is to provide kind of financial planning sessions, looking at if you want to buy a home or if you want to pay off your student loan, or is that at the expense of your pension, and how can you actually plan for the long term through your careers. And I think for employers, it's really important that they have those conversations with their employees. So I think often in the insurance and wider financial services industry, there is a kind of a very steep curve after a long number of years in terms of financial rewards. So younger people tend to be very flat for a long time, and then there's a big jump. Whereas actually, I think if you're having conversations with your employees and asking them what are their financial goals in the next 2, 5, 10 years, and how can you as a business support them through that journey, and you might find that rather than kind of very flat and then a big jump, a more kind of sort of slower curve to the same point over the same amount of time would actually help your employees be a lot more secure and a lot more loyalty to the business. I think there was a question, as we've been discussing, about the diversity within the workforce and how you actually reflect that. And again, that's a big part of our work at Next Generation Insurance Network, is really supporting the diversity and inclusion of the workforce, particularly through the Inclusion at Lloyd's partnerships. And I think the most important thing is to make sure that not only are you recruiting a diverse talent into the business, but you're also giving them positions of authority and also making sure that they're involved in the decision-making process. I think if you can get younger people involved in kind of building the products and designing and have an influence over the products that you want them to buy at the start of their careers and at the start of their kind of life journeys to take them all the way through, having that input will really help them to kind of feel ownership and also reflect the wider needs of the business. And then equally at the other end of the spectrum, people who are at the sort of the end of their careers or towards the end of their careers, actually getting them more involved in kind of that product development and using their feedback as consumers within your business would really help. Caroline?
Is that you done, Benjamin?
Yes, I can leave a couple of minutes for questions.
A few questions. So I'm just looking at some of the questions. I think this one goes to you potentially, Dr. Matt. Is there any statistical evidence to show what lifestyle factors reduce the likelihood of your cognitive abilities deteriorating as you get older? I'm listening. Matt, I think you're on mute.
Sorry about that. So yes, so I think I'm so excited to answer the question. I didn't remember to. So yeah, no, there has been a lot of work on this, and there's been some really fascinating work. AUK did a conference a couple of years ago, which highlighted a research project that's been going on for decades, scanning people's brains as they get older and looking at how that develops and how cognitive functions sort of maintain or decline. So there is a lot of stuff out there that I think there's obviously connected with vascular dementia. There's a lot of evidence to show that exercise and good diet, what's good for your heart is good for your brain, because your brain needs the oxygen that the heart's pumping to it. So there's a lot of evidence to show that lifestyle decisions around physical health and fitness also have an impact on the opportunities to have good mental, good brain health throughout later life. There's also evidence that people's brains pick up a certain amount of damage as they go through life, and the more damage that's accrued will have an impact on the health of cognitive abilities. But there's less, people are less sure about what causes that damage. But we're kind of learning more and more about concussion and the impact that has. So those kind of factors. I guess where there isn't much evidence at the moment is around sort of how you use your brain and how that impacts. I think there is some evidence that people who speak several languages manage to have reduced cognitive decline, but whether that's a causation or a correlation, because we know that people who start off with good cognitive functions tend to maintain that into later life. So, but there is a correlation between speaking lots of languages and having good cognitive health throughout life. where there isn't so much evidence is around sort of the games that you can play, the sort of brain training and things like that. That doesn't mean that they don't have a beneficial effect. It's just that there hasn't been a study yet that's been able to really test that exhaustively.
Thanks, Matt. There's a couple of questions here, probably for Phil and Benjamin, around can families buy a plan for the whole family? Is that something that you can see coming in the future?
I'll start from an insurance angle. I mean, I think it's going to hold the grail about how you sort of transfer wealth between generations, which is, so on protection, it's not particularly suitable, but I think if you had some kind of wealth products, then that would be possible. If you think things like equity release, they are wealth generational transfer mechanisms, but there are complications around tax that often come into play when you're talking about investment products. So typically there are not that many products that cover families outside of sort of general insurance, where it might be kind of multi-car type products, but on the life and pensions side of the house, not so much.
Benjamin, anything?
I think it's maybe less around having a household policy, and maybe the industry might get to that point, but I think it's about having the conversation so you know what is in place in terms of with your siblings and your parents and grandparents. I think far often families don't have that kind of really open and honest conversation about what's in place financially, what the future could look like. And I think if you have those conversations and actually work out what your overall position as a family unit and whatever that means to you is, I think that's the biggest way to do something today. And then maybe the industry will catch up. But I think it is quite a difficult thing when you've got a number of stakeholders for an insurer to kind of underwrite from all those different aspects.
Yeah. Lots and lots of interesting information there, and Phil, you touched on another whole separate topic, which is how the taxman deals with all of these situations and all of these sorts of policies, but that'll have to wait for another day. I think we probably need to be wrapping up as we've just tipped over midday. The next slide actually shows a number of providers that people can go to seek further advice, and we would encourage you to do that. Really now I just want to wrap up and say thank you to all of the panel for being part of this session today. It's probably not the most bright, optimistic dive-in session, but I think it's one of those ones that is absolutely necessary for all of us, and to make sure that we get particularly the younger generations engaged and interested in these sorts of discussions before they get to later life. So thank you all very much, and I just suggest we bring this to a close now. Thank you. Goodbye, everyone.
Thanks.